repo rate cut by 50 basis points. That's a strong move. No wonder the markets were pricing it in. 40 points up for the Nifty, 50 basis points repo rate cut. I wonder if the CRR has come in or no, but clearly the market's not worried about that. A 50 bips cut gives that Philip 1% higher for the Nifty. Unexpected. George Cherin, our banking editor, is live. George, take it away.
All right, so the good news is that the repo rate has been cut by more than what everyone was expecting. It's been cut by half a percentage point. The repo rate stands reduced from 8.5% to 8%. Accordingly, you have the other rates like the marginal standing facility and the reverse repo rate, which also corrects by 50 basis points. So the reverse repo rate now becomes 7%. The marginal standing facility becomes 9%. The bank rate also, of course, is corrected at 9%. Now, some of the the projections really that the Reserve Bank of India has made on the credit growth front, it's talking about a number of 17%. On deposits, it's talking about a growth of 16%. Inflation for March 2013 has been pegged at 6.5%, and it has said that inflation in the remainder of the year is going to remain fairly volatile going forward. M3, of course, M3 has been set at 15%. And the big positive really for banks is that under the marginal standing facility, where banks could raise up to 1% through their net 1% outstanding of their net demand time liabilities, that is being increased to 2% of NDTL. So that cushion is really being created for banks for accessing extra money through the marginal standing facility. Now, while the good news is that the repo rate has been cut by a half percentage point, the bad news is that the RBI has said that given the inflationary considerations that it needs to work with, after this half percentage point cut, the market should not expect anything more going forward. And just to read out what the RBI has said, that inflationary considerations inherently limits the space for further reductions in policy rates, essentially meaning that if you've had a half percentage point cut today, don't expect anything more, at least for some time. And also the fact that it has spoken about inflation being seen at 6.5% in March 2013 is really means that you aren't going to expect anything on the policy rate front going forward from here. So half a percentage point is as much as you get, essentially telling the market that you wanted a cut. I've given you the cut, now stay happy with that. You aren't going to get anything more.
First of all, on behalf of the Reserve Bank of India, a hearty welcome to all of you to this annual monetary policy for 2012-13. A short while ago, we put up our annual monetary policy statement based on an assessment of the current macroeconomic situation. We decided to reduce the repo rate under the Liquidity Adjustment Facility (LAF) by 50 basis points. The repo rate will accordingly drop from 8.5% to 8%. Consequent to this, the reverse repo rate under the LAF, determined with a spread of 100 basis points below the repo rate, gets calibrated to 7%. Similarly, the marginal standing facility MSF rate, which has a spread of 100 basis points above the repo rate, stands adjusted to 9%. In order to provide greater liquidity cushion, we have also decided to raise the borrowing limit of scheduled commercial banks under the marginal standing facility from 1% to 2% of the net demand and time liabilities, NDTL. These changes have come into effect immediately after the announcement.